Budget and you is the focus on Let's Talk Money today. How much has the finance minister given and how much has he taken? What does this mean for your income, savings and investments? Very simple. We'll try and keep it simple because there's just too much jargon in the budget, but we're actually looking at your savings and investments. My panel today, Roongta, CEO of apnapaisa.com, joins us from the Mumbai studio. Harsh, thanks very much. We also have Gagan Randev, CEO Religare Securities here in the Delhi studio. Kuldeep Kumar, Executive Director, PwC India. Gentlemen, thanks very much for joining me. I think let's start with the first initial reaction for the individual. Harsh, what did you think? The budget was good, bad or ugly? I think that would be the easiest way. We'll go into each of the propositions which are relevant a little later on the show.
Well, I think it is not going to turn out to be great. I think we really, the main thing being with this increase in excise and service tax and fuel prices set to rise, I think inflation will continue and interest rates therefore. So it's okay. At least there is no hugely bad news except for this hike in
excise and service. All right, excise service inflation. So Gagan, there is that entire change in the income tax slabs, which we'll just bring up on the screen for you. I'm sure most of you have already read it in the papers, but still, why not? Just recap that. So there is a saving of about 2,600 to 22,660. But on the other side, we are talking about service tax and excise going up, and therefore he's giveth and he's taketh.
Absolutely. So if you look at the overall budget, and firstly from my perspective, I think the budget from my perspective is absolutely satisfactory. You know, there were people who had a lot of hopes on the budget that there is going to be something miraculous because the government, you know, made this maybe a big bang budget. On the other hand, there was a fear that is he going to really go the other scale and you know, try to tackle on the fiscal deficit, which could also actually look at derailing the economy. Having looked at all that, I think he's done a pretty fair job. There are some very good initiatives in the budget, and we have to see how they play out. The Rajiv Gandhi equities, Yojana, allowing QFIs, etc., to invest in the corporate bonds in the country. Even this thing about it's a small amount, but even 10,000 rupees interest saving on on savings accounts, etc. Those are steps. Yes, what is given in forms of a tax saving is going to be taken away by higher service charges, and you're going to pay that on a lot more services than before. But I think given the hole that we had, given that the fact we were staring at a 5.9 deficit, I think people were more. He did have a choice, and I think people were more worried about whether he's going to increase corporate tax rates, etc., which actually is left unchecked.
Inflation, that's what he mentioned. Harsh, we'll come to that point a little later, Kuldeep, but you've looked at the tax changes and I'm sure you're seeing a lot of hits and lots of misses, right? What are the hits? The entire tax slab change which has happened, is it enough? And who is it enough for? Because we were having this discussion and you said the people between 8 and 10 lakh of income don't really save anything at all.
Yeah, that is true, because what he has done is that he has raised the basic exemption limit from 1.8 lakhs to 2 lakhs. And then he has expanded the 20% tax slab from 8 lakhs to 5 to 8 lakhs to 5 to 10 lakhs now. The net effect is that the individuals who are earning less than 8 lakhs, they only save about 2,060 rupees. But the individuals who are earning more than 8 lakhs, so they are going to save substantial money, about 22,660 rupees in that manner. But again, perhaps, I think that he would have done
what could he have done?
What he would have done, maybe, maybe putting little more tax on the higher tax bracket, people earning more than 20 lakhs, 30 lakhs, pay 5% more, and giving the basic exemption from 1.8 to maybe 3 lakhs, or, so that the money should have equally flown to the lower middle class or that section of people as well. And particularly when, actually, in the budget, what happens, you give in one hand, you take in the other, from the other way. Now, inflation is already there for the last 2 years, and your growth rate is already under challenge, and then the rising oil prices, the situation in abroad. So you cannot say that your economy is totally dealing from the globe and you can do whatever you really have a choice.
Right.
So he had a very limited choice. So whatever he tried to give you, he has taken in the form of raising the excise duty or the service tax, and in fact expanding this service tax net for a whole lot of service and only 17 services to be exempted. But don't forget that all this excise duty or the service tax which were there, So those actually concessions were given when the
economy wasn't doing well. So he's actually restored them. All right, let's just bring that graph up for you. Income up to 2 lakh, nil income tax at 10% for 2 to 5 lakh, income tax at 20%. That's for rupees 5 lakh to 10 lakh, and of course income tax at 30% for income over rupees 10 lakh. And as we've mentioned before, tax changes at the highest tax bracket, that's 30% tax bracket, actually save you about 22,660 rupees. So that's the end implication of it. Harsh, I'm going to come back to you. Inflation and interest rates. Now, these are the two things that you pointed out. I'd like to understand from you, how worried are you? You know, there is this whole expectation that interest rate cycle will start cooling off maybe in another quarter or so, which seems now. Or do you think that it's going to probably get pushed out to much later, and how much can we really expect on interest rates coming down or cooling off this fiscal year?
Yeah, so absolutely. I think the issue is with the market expectations. I think the market clearly, and consumers really, I mean all consumers were expecting that inflation will cool off and that interest rates as a consequence will also be allowed to cool off by the regulator, RBI. Now the point is, I don't think given the numbers that we saw yesterday, and given the fact that we're going to now, if he sticks to his word, we're going to see fuel price increases, etc. I don't think inflation is going to go down in a big hurry, and if it doesn't go down in a big hurry, clearly this interest rate drop that we were thinking is just around the corner may get pushed out a little more. So it's not a huge thing, but clearly these expectations are going to be delayed. That's at least that's clearly something that I feel, and whatever implications that has, downstream implications that has, will happen. It's not a big bang thing. It will unfold over the next 3 or 6 months.
A big disappointment, Harsh, was the fact that nothing happened for people sitting on a home loan. The exemption limit for home loan interest from 1.5 to 3 lakhs was just waiting to happen. Look at the way homes have got so expensive, and also the fact that loans have become so much larger. Were you disappointed with that?
Well, I think expecting that was not something that would have been correct, given the fact that his hands were tied, and at the end of the day 1.5 lakhs is roughly about 13-14 lakhs of loan, roughly 17-18-20 lakhs of house value. It covers about 60%, 50-60% of all people who take loans, so it does cover a fair bit of constituency. An important thing, I mean, forget the fact that he didn't give relief. I mean, there is a provision that's been introduced, it's not been discussed in the papers as much, about this deduction of tax at source by buyers. I mean, that's a procedural nightmare, and already we see that for NRIs. When there are NRI sellers, today purchasers balk at buying from NRI sellers because of the need to deduct tax at source and the consequential procedural issues with that. Now that has been also been put in place, or it is proposed, even if you buy from resident individuals. I think that the procedure making it so difficult is going to have a bad impact on it.
TDS on home sales, and the fact that 1.5 has not become 3 lakhs, both areas of concern, or do you think TDS on every home sale will actually impact a little bit of that, you know, that large cash economy on real estate?
On the TDS he will still notify the procedure, but in the budget memorandum he has stated that when the transferee would be deducting the tax, he has to fill a one-pager kind of a challan, and there is no requirement of filing a tax withholding return or even taking the tax collection number, because when you file a return you need to comply with those procedures. So in my view that he will make those things very simpler, one pager kind of a thing. So the objective is just to collect the money.
Okay.
Now coming on the home loan, you see, I mean, whatever changes which has come here are actually basically in the direction of DTC. So you will see the DTC which is expected to come next year. So there also the limit for housing loan interest has not been raised beyond 1.5 lakhs.
Oh, it isn't. So it's going to stay that, Gagan.
Yeah.
So Okay.
But the other thing which I'm going to tell you is it could be a little nightmare. You know, there is a provision under the current tax laws which says that if you have taken a loan and the construction is not completed within 3 years, then you are eligible for a reduction of only up to 30,000 rupees.
Oh my gosh.
Not
Okay.
up to 1.5 lakhs.
So 30% of 1.5 lakhs.
No, it is only 30,000 rupees.
30,000 rupees.
30,000 rupees.
Just 20% of.
Yeah. So it means that now you see, without any fault of the buyer or people who are investing in the housing, and if most of the projects of these builders are getting delayed, and I don't think that anybody is actually completing within 3 years.
Oh, nobody is completing within 3 years.
and this thing is going to continue until the time the whole loan is repaid actually.
Okay.
So something need to be done to give a relief to that middle class taxpayers actually.
It's extremely important. Maybe I think that's another thing that we need to urge the finance minister to look into. But direct tax code, we got the sense that okay, it's been delayed but on track to get implemented. How quickly do you think? Next year, Gagan?
I think that's the indication that directs, so he's indicated that GST is going to be rolled out by August this year and direct tax code next year. So I think that's the best we can hope for and hope that it doesn't get delayed further. But I think it's, after a long time, it's a clear signal as to when he hopes to implement it. So we're looking at a 1 year time frame. Which is fine, and some of the stuff he's done is just pointing to some of the directions ultimately that the direct tax code is going to be taking.
All right, and when that happens, so you get another exemption, right? Up to 3 lakhs of income becomes tax free.
That's right. That is what was proposed, if I remember correctly.
All right.
Yeah.
Okay, we're going to take a quick break now. We've looked at taxes. 1.5 lakh on home loan interest to 3 lakhs was probably an expectation which wasn't going to be met, because it's really not even part of DTC, that's direct tax code, which will get implemented hopefully by the next year. We'll come back and we'll look at a little bit of the budget provisions for your savings and investments, and also overall picture. What does that mean in terms of fiscal deficit and growth for a large part of your portfolio that we've been recommending here on Let's Talk Money? That's equity mutual funds, very closely linked to the markets. Keep watching. In budget, and we're just looking very simply at what the budget has done for your savings, taxes and investments. My panel today, Roongta, Apna Paisa from Mumbai, and in the Delhi studio, Gagan Randev, CEO of Religare Securities, and Kuldeep Kumar, Executive Director, PwC. Gagan, I'm going to start with you on the savings aspects of it. There has been a little bit of tinkering. You've got 10,000 rupees of interest now, which will be tax-free from your savings account. You have a little bit of, margin now in terms of infra bonds, which will come in the market. What is it that you liked? What is it that you think could have been done more?
See, I think, and again, this is what I think the finance minister believed. I think the worrying sign for us in the last couple of years was that the savings rate in this country, which has been historically very high, has actually come down. I think what he's done is this time clearly signaled to individuals that I'm giving you a range of options for you to start getting maximum buck for your money. So there are a couple of things he did on the capital market side. The first one was on the Rajiv Gandhi equity scheme for first time investors, that if they open their account, etc., and they invest, if they are up to 10 lakh, they're earning up to 10 lakhs of rupees, there's a 50,000 deduction which effectively saves them 7,500 odd rupees of tax, which is good because it allows people.
It encourages smaller investors to come into the market.
Absolutely, and I think this is probably, of course, the onus is going to be on the industry to try and push this, but I think this is going to be very successful as we get into tier 2, tier 3 cities where incidentally, we have a pretty large presence. So that is going to be one. Second, while the STT does not make any impact today simply because the service charges increased, I think it's just signaling to the capital markets after a long time that I'm conscious of some of the issues and I'm going to address them, maybe not all at this point of time. The third thing, the doubling of the limit on the infra bonds from 30,000 crore to 60,000 crores. For HNIs, etc., or even retail investors who are looking at a tax-free kind of bond, giving 8.5%, etc. Last year, we saw tremendous demand in the issues which came. People getting 30-40% allocations. It just allows you now to probably have a higher allocation.
And country gets more money for infrastructure
development. And it helps the infrastructure and the power sectors. And the last one is, of course, even the small tinkering. The one the tinkering on the 10,000 rupees on the savings account. With banks now offering up to 6% or 7%, also some of them on savings bank. It is just that it's much more effective for me to keep this money in the savings account than even open a fixed deposit or keep it elsewhere. And the last one, which I think if we are able to sort out the tax implications, is this QFI opportunity on investing in the bond markets. Today,
Explain QFI.
QFI are qualified foreign individuals.
Right, but they can now invest in Indian
They last year
bonds.
were allowed to start investing in equities, mutual funds. Early this year they were allowed to invest in equities directly, and now they've been allowed to invest in bonds. There is one pain area which I know the SEBI etc. has been trying to sort out, and which is the whole process of somebody, a foreign individual, filing a tax return etc. So what has been proposed is that start taking a transaction tax rather than expecting them, an individual, to apply for a PAN card and file returns. If that is simplified, you cannot even believe the kind of interest lying outside to start investing in India, either in equities or in mutual funds or now in bonds, because the arbitrage is going to be very, very strong.
Very huge.
And I personally believe that
if the rupee stays afloat.
I personally believe everything that we've seen is very positive for the rupee. So ECBs etc., allowing ECBs to garner money for airlines, for power sector, for low cost housing, what he's done on the QFI opportunity for bonds, the initiative on capital markets etc. I personally believe, and given the state of liquidity, I think we actually, barring the short time run up where the dollar becomes stronger, I personally believe that this is probably going to be a good year for the rupee, and the rupee is going to appreciate.
Wow, good year for the rupee. Maybe inflationary pressures, but if the government gets the supply side right, not so much. Roongta, come in here. You've heard Gagan express actually outline 5 or 6 key positives when it comes to savings and investments. How many do you agree with?
Well, I unfortunately am not as bullish as Gagan is, but I agree with him as far as external investors are concerned. I mean, you've already seen that the deregulation, for example, of the NRE accounts, and today you have NRE fixed deposits and NRE accounts that were already tax free, and interest rates have risen because they have been deregulated, and it's an excellent opportunity for NRIs today. Of course, those are restricted to NRIs and person of Indian origin, but it's an excellent opportunity. Today, a State Bank of India for a 10-year NRE deposit is willing to give 9%, and that's tax free. So it's an excellent opportunity. Similarly, would be all the other opportunities that Gagan outlined. So I think clearly from an external investor's perspective, this clearly looks good. Again, nothing in it for, in fact, if you look at the small little things that we have let go, I mean, the infrastructure bond hasn't been renewed, that additional 20,000 rupee deduction hasn't really been renewed. There has been this increase in the minimum sum assured for life insurance, which is good. We have always recommended that life insurance is all about protection, not about investment. But in terms of money that will come into the sector, that will obviously get affected. So to that much extent, I think for a domestic investor, let's see how this Rajiv Gandhi equity saving scheme works. I really would like to see the details of whether it will really work as well as we all expect it to. So I don't know. From a domestic investor's perspective, I don't know how good this is going to be.
All right. There you go, Gagan. I think Harsha said you're too excited about the budget.
I really don't think so, because currently there are a lot of other factors which have been driving liquidity, etc. And my personal thing is, if there is only one thing which I see as the devil in the detail, it is this whole thing on the Vodafone tax implication. If that were to be picked up retrospectively, I think that is the only item which I think could derail, how foreign investors look at India, because they are not comfortable with such surprises. And so that is the only thing that I see as a negative in the budget. Yeah, there are several things he could have done which he hasn't, but there are several things he didn't do also. So overall, as I said, I think it's a pretty satisfactory budget.
Okay, so liquidity. Gagan's just mentioning the fact that liquidity in the market seems to be all right now, and with all these additional benefits or encouragement for foreign money to come into the country, liquidity should be fine when it comes to the equity or bond markets. But most of these markets, or the markets actually, are very, very closely related to how the economy will grow, and that's what will really drive more money inwards as well. GDP growth expected at 7.85%, and of course you also have a fiscal deficit to be maintained at 5.1%. One more step to DTC and GST, as we've already discussed, but no specifics on cutting subsidies. So we really have to look at all these 4 things and weigh out what will happen in the coming days. Kuldeep? in terms of the growth and the fiscal deficit targets, do you think they're close to what will happen in FY 12-13?
It's going to be a big challenge actually. You know what, actually before he presented the budget, that was actually an agenda, whether is the growth is going to be the agenda or the politics, the assembly result which was there, that's going to be on the back of his mind. But today our economy is not only a skeleton or moving independently. You see, look at the rising oil prices, look at the fiscal deficit situation, then the money which kind of going into the subsidies, it's a huge challenge. So I think it's only the time which is going to tell us that whether we are going to be around 7.6% or something else could happen.
All right, gentlemen, there was so much to discuss, but unfortunately we've run out of time. So growth, let's see whether those figures of 7.6% plus do come in for FY 12 or 13 or not, and the equity markets will be very closely related to that figure as well. Harsh, Roongta, thanks very much for joining me here on Let's Talk Money. Gagan and Kuldeep, pleasure to have you, gentlemen. Next